Are a few banks going to collapse along the way? I mean, that's collateral damage, maybe. Do we go into recession? Maybe, but it's probably worth it. I think that's their grand scheme of things. So I expect probably a pause, but I expect them to probably stay high for a while. Yes, I think we see recession coming.
In today's video, Mark Moss, host of The Mark Moss Show, discusses his claim that this banking crisis is only in the first inning. He claims that he uncovered something much bigger and deeper than most people realized and could crash the entire system.
Bitcoin is a decentralized, censorship-resistant, immutable ledger. So for things that need that, it makes good sense. For things that don't need it, it doesn't make sense. So to the point of a will, for example, if I'm a billionaire, we've all seen the movies, I make a will, I put it in my desk, and then my heirs try to sneak into the room and change that. Well, that might want to be in a censorship-resistant, immutable ledger that nobody can control. So it might make sense to put that will into like a Bitcoin blockchain where you could protect that. The deed for a house, I think that's kind of ridiculous, because if you don't get out of my house, I'm going to have to go to a court, and I'm going to have to go get the police, and then I'm going to have to prove that I own it, which is going to go to the county recorder. So I don't think it makes sense to put physical, real world assets into a digital ledger. Now, for natively digital properties, it makes perfect sense. So for example, what we're seeing happening on Bitcoin for now is like ordinals. And right now it's like a JPEG, but we're also seeing the King James Bible is also put into the Bitcoin ledger. And so we can put books like the Bible that would be persecuted. Now the Bible can, instead of being smuggled physically into China, it's on the blockchain, it's on Bitcoin, and they can just download it. We're seeing 3D gun schematics. And so for natively digital things that need to be censorship and immutable, I think it makes perfect sense. A will could also fit into that. Homes for deeds, no. Now, on to the first part of the question, which was stocks, bonds, things like that.
Right.
So you're probably old enough to remember, or you've seen the movies, that stocks actually used to be bearer instruments. It was actually a certificate, a stock certificate. Bonds as well, bearer bonds. Those old James Bond movies, they had to get paid in bearer bonds, right? And so those were actually assets that I could own, and then you and we could meet up, and I could just sell you my stock or bond certificates right there. We could do a deal. It was a bearer instrument. Now it's not like that anymore, right? It has to go through 6 layers through the DTCC for the registration. So potentially we have the technology to do this. The law's in the way, so we have to get the regulations out of the way. But potentially we could have an asset. The technology is there for Bitcoin to do this, where I could have a share, a security or a stock or a bond that I could custody myself, and then I could transfer that stock or bond to you directly over the blockchain. And so I could go back to being able to custody that stock or bond certificate myself. The problem is the legal system doesn't want you to have that. And so that's the big problem. The technology is certainly there. I just want to be very clear about this, Paul. Both of us are Americans. America is the land of the free. My grandfather and my father both fought in wars to protect my freedom. In the land of the free, everything is free. Everything is legal. Laws are made to prevent us from doing things. I don't think that we need the SEC. I think the SEC should be shut down in disgrace. I think it should be disbanded as part of the entire administrative state. Their goal is to protect consumers, and they failed to do that, and their policies actually put consumers in harm. So I think they should go away, and there should be no regulations. That's what I think. But they're not. They're here. So what do I think about that? So I think, to your point, Gary Gensler has been very adversarial to cryptocurrencies. And to the point there, he said he was going to do it. And that's why after the whole FTX debacle, I went on several shows, I think yours as well, saying that I think this could be the end of cryptocurrency as a category won't see another bull run, because I believe that the regulations are going to come after it so hard. And that's certainly what we're seeing. The problem is that it's still very arbitrary, and there's no clear-cut guidelines. And so, to your point, there's a lot of pushback on Gary Gensler. He was also brought before a subcommittee, and Patrick McHenry just rammed him, right? And just said, look, you're not clear. He said, what do you mean? We're clear. He said, okay, then fine. Is Ethereum a security? Well, I can't answer that. Well, then you're not clear. And then they went on to say that, look, you're pushing all this into China's hands. You're hurting the United States.
Innovation.
This is going to have a long-term negative effect. So why are they doing it? That was kind of the question that you posed to me, and we don't have a long answer. But what I'm going to say isn't, it's a little contrary. But you know how you're in cryptocurrency and Bitcoin. The one thing you're always going to hear people ask you is, they're going to say, but they will never allow something like Bitcoin or crypto to succeed because they will never give up control over money, right? You hear that a million times. Great. So who are they that don't want to give up control over money? Is it Jamie Dimon and the New York Fed doesn't want to cede control to the ECB? Or is it the ECB doesn't want to cede control to the BOJ or the PBOC? Who are they? Which central bank are you talking about? So what we're seeing is multiple factions. There's 4 main factions in the world today. Neither of them want to cede control. I believe in this conversation that we had that you have warring factions in the United States. So really you have this kind of Obama, Biden, Euro, Davos, ECB group. Right, that's the globalists. That's Davos, and Warren, Elizabeth Warren, Gary Gensler. They're all part of that. They do not want any of this to succeed. They want all, not just cryptocurrency, but all technology, as we saw in the Restrict Act, all technology to be brought down so they can maintain their grip, and that's why they're doing it. Then you have the Fed. I believe the Fed, Jerome Powell, Jamie Dimon, etc. They're okay with Bitcoin. They want it to happen. They're okay with it. Maybe not the stable coins because they don't want the Eurodollar market to continue to grow. That's another conversation. But I think there's warring factions. I think the reason why Gensler and Elizabeth Warren and Biden and Euro Davos are on the warpath is they do not want technological innovation, including Bitcoin and cryptocurrencies, but also including decentralized communication networks like Nostr, Telegram, etc.
What do you make of, I know you're not a big fan of the banks, but what do you make of how this might roll out over the next, say, 12 months?
Well, you hit the nail on the head. You said it seems to be which banks. So it sort of seems like they're picking and choosing banks, doesn't it?
Yeah.
So let's think about which banks went down. Let's see. Silicon Valley Bank, PacWex Bank. Both of those banks are in California under the San Francisco Federal Reserve Board.
Yeah.
Both of those are oligarch banks that are friendly with the European Davos connection. Well, if we look at the Fed and Jamie Dimon trying to work against the interests of the EU Commission Davos group, is it possible that they weren't happy with the way the San Francisco Federal Reserve, which used to be chaired by Janet Yellen, who is a globalist, she's part of that program, is it possible that they didn't like their policies where they are way too lax and they allowed way too much of these exact things to happen, and they enriched this oligarch class that was friendly with EU? Is it possible that they chose those banks to shut them down? Now, you might say, Mark, that's going way too far. How dare would you say that? Well, we can also look at some other evidence. So, for example, there was another bid, potentially a better bid, to buy PacWest Bank. Who was that from? PNC in partnership with BlackRock, which I'm sure you're also familiar. BlackRock is also part of the EU Davos group. And PNC Bank offered to buy it, a great deal with BlackRock, and the Fed turned it down. Who bought it? Jamie Dimon and the New York Fed. So I think you hit the nail on the head. It seems like they're choosing which banks. And so it seems to me this validates this warring faction thesis that I'm talking about, and you can see it playing out in real time. Now, is this grandstanding? Of course this is. Well, I'd like to find out why Elizabeth Warren is worth $200 million on a public servant salary. I'd like to know how Nancy Pelosi's the best stock picker in the history of the friggin' world, right? And so, yes, it's grandstanding. Let's go after them. Now, they made money and they lost their bank. They lost all their equity. They lost a lot of money. Capitalism played a little bit to effect. Now, did they have insider information and sell their stock? Probably. Well, they should be prosecuted for that. I think so. Yeah. But I think we should also go get all the politicians like Elizabeth Warren that trade on this information as well. I think the law should be applied equally, right?
What are your thoughts on these entities that are starting to really ramp up these interest rate payments to draw in funds?
Yeah. So there's a big difference. And so to your point, yes, we're seeing this competition, which I always view competition as a good thing, as it should be. The banks have gotten way too complacent and fat and happy in their position, and they're literally making now 5% and they're paying you 0. I mean, that's just not right? The way the banking system always worked is you deposit your money, they loan it out, they make money, they give you some of that money back. When I was a kid, banks were paying 10%, right? So the rise of Celsius was something different. We were in a 0 interest rate world. So there was no interest to be made, and they were paying out, 10, 12, 15%, right? So then the question is, how the heck are they getting that? And obviously we found out it was a big Ponzi scheme. When times were really good, they could somehow figure that out. When things fell apart, it all fell apart. Now, to the question that you're asking, is this dangerous? Is Robinhood, is Apple Pay, is this leading into a dangerous path? Well, it's dangerous for the banks who are fat and happy because they're going to continue to get bank runs happening to them.
Right.
Apple Pay brought in $400 million the first day. And so we're going to continue to see that trend. The banks need to pay the money. Now, is it dangerous? I don't think so. And the reason why is because we can legitimately see how they pay that. I think the 3-month treasury right now pays 5.1%. So if Robinhood's going to pay you 4% or 4.5%, they're still making 0.6 on the spread. So I don't.
They're talking about taking that up though, going above the federal funds rate. So literally going into I think 7 or 8%, which would require a rebate back from the banks that they have the deposits secured in.
Got it. Well, I don't know enough about that specifically, how they're going to come up with that. So, for example, as I mentioned, early days, you would give your money to the bank and they would loan it out. So typically, I think the banks make an average of like 17% interest when you take in like high interest rate credit cards, car payments, and then you blend it with house payments, et cetera. So about 17%. Right. So it's easy, maybe of that 17%, they're going to kick you back a couple points. I'm not exactly sure how they come into it. It sure could turn into dangerous if they don't manage it properly. Right. So I'm not exactly sure how they're going to pay those extra 2 or 3 points. So I guess I really can't comment on that. But I think, again, Celsius was doing it in a 0 interest rate world. Today, obviously, with 5% interest rates, it's a lot more believable.
Mark, do you think that we're in a position now where the Fed does go in with either a pause within these next few months, and with that being the case, rolling into a recession, possibly we might see inflation slowly ticking down, even though there's a lot of analysts still believe that that is potentially going to be on the rise? What are your final thoughts around that?
So I think what we'll probably see is probably a pause for sure this year. I don't know if we'll see the pivot, which would be actually going back down, but for sure, I think we'll see a pause. Again, this viewpoint that I have of these warring factions, which kind of leads me to believe that you can't taper a Ponzi, but you kind of can. And for a while, what does that mean? It's like chemotherapy. Chemotherapy kills me, but it also kills the cancer. And the hope is it kills the cancer before it kills me. And so what the Fed is doing is they're bringing all the central banks of the world to heal. They're taking a bite out of this euro dollar market that's gotten way too out of control. And so they're tapering all of this to bring all of this under control. Now, are a few banks going to collapse along the way? I mean, that's collateral damage, maybe. Do we go into recession? Maybe, but it's probably worth it. I think that's their grand scheme of things. So I expect probably a pause, but I expect them to probably stay high for a while. Yes, I think we see recession coming on the back of that. Now, as far as inflation goes, what happened, I did a video on this on my main channel, Mark Moss, in January, and I talked about how they changed the CPI basket calculation. And they went from a 2-year comp to a 1-year comp. And so what happens is they're measuring from last year. Well, September was the highest CPI that we've had in like 40 years, 9.1%. So when you measure from there, we're going to be dropping big time. So I said, I did the math and I forget now, but I said, even if nothing changes, inflation will be coming down because of the new calculation. And I said by, I think, September, we'd be at 3%. And here we are almost at 3% when you start to calculate it. So abracadabra, a little bit of magic, CPI comes down. Now, to the last part of that question, I have been on record and I continue to hold the position that I believe inflation is some of the lowest that we'll see for the rest of the decade. Now, no assets go up or down in a straight line. So it's going to rise and fall, but I believe that we're going to be expecting much more inflation in the years ahead. And while this is a disinflationary period, it's dipping. But if you zoom out over, as I said from the beginning, it depends on what time frame. Over a longer period of time, for the rest of this decade, I believe this is some of the lowest inflation that we'll see.